All right, hey everyone. Welcome to another episode of Trading Bitcoin with your host, Vays, coming to you live from Cape Town International Airport as it is time to move on. I am headed to Johannesburg for Blockchain Africa conference. So that is where I will be for the next few days for that conference. Let me pause this. Let me glance at the live chat. Should probably check that I'm using the proper audio. No webcam. Just gonna do a quick look at the markets because things have certainly been moving. So let's go to the charts. Wait, which? Hold on, I don't want to open the wrong thing. I dox myself enough as it is. Okay, here we go. Close that, and we'll do this. Okay, now we can go. Boom. All right, this is the tab. Hey guys, if you want to support this free podcast that takes a look at the markets and other stuff, please use the affiliate page of tonevays.com. There's really no more workshops. All it is just me traveling and speaking at conferences. So please support if you're going to use any of these products. I love my Embly card. That's been my most used product on this list, other than TradingView, of course, and VPN as you travel around. All right, but for you traders out there, plenty of choices. All right, guys, the conferences. Let me still keeping an eye on what's going on with the virus. And as of right now, as of this minute, things are still a go, but we have not started taking payment for understanding Bitcoin. And I'm trying to figure out when the peak stuff is going to be. Anyway, we'll keep you guys updated. For now, no changes, but we'll see. Here is the weekly chart. Here is the weekly chart of Bitcoin. And as you can see, the short trade has been activated as of $8,400. And the price ran all the way down to $7,600. So that's almost a $1,000 swing. So that's probably about 10+% in just a little, well, not even a day, basically. So that could have been a decent trade. And this trade is still in the money. I would certainly be putting in some break-even stop losses and taking it from there to see what happens next. Right now, the weekly chart certainly looks bearish, but if you notice, again, you have the potential of an inverse head and shoulders here with a left shoulder, a head, and a right shoulder, which would be, you know, like a perfect textbook head and shoulders, but we have to turn around. Like the price has to first turn around and start approaching this line. If the price of Bitcoin can break this area of 9,500, I will be a bull for the next few years, probably. I can always change my mind the next day, right? So like, I think I became a bull like right up here. Like at the last dollar, I could have become a bull, right? But I could have also become a bear $5 later. So that doesn't really matter. Like it doesn't really matter if I become a bull right there. What matters is I become a bear right after. And that's the trade that works. So if anyone goes to a video 4 days ago and starts looking at it saying, oh, you should have counter traded tone, well, I hope you counter traded tone here on the crash, right? Because that's when I was bearish. In general, I've been bearish. In general, none of this ever made sense to me. I always disagreed with my friend Willie Wu that there was some kind of massive accumulation. I am in the Bitcoin environment. I am in the shitcoin environment, and none of this is ready for prime time. None of this is ready for adoption. Like I said on yesterday's video, we still have up to 35% of people that have no clue what crypto is because they still believe in shitcoins, right? So I don't see mass adoption coming, but let's hope I'm wrong. The GBTC premium has actually cratered, but the price is starting to rebound of Bitcoin. Though not anymore, really. The daily chart is still bearish. The daily chart is once again bearish. You have a red 2 going below the red 1. You have a red 3. You are below all the moving averages. The only thing you have going for you is that the short-term moving average, which is the 50 period on this chart, is not yet below the other moving averages. So as of now, I am sticking with the red arrow. I'm still expecting prices to go down to 7,000 and probably lower. If the price of Bitcoin comes down to that low $7,000 range, I would still be expecting us to go sub 6,500 before the halving. This is the 4-hour, no, it's the 12-hour chart. I don't really care. A 4-hour chart, not that interesting. It's starting to rebound, but now it's already starting to roll over. I'm really curious what's going on with gold. Gold had a new high. There's probably divergence here, and there is. There's very nice divergence on the RSI. But gold is still bullish. You can see how the moving averages are still rising. They're all above each other. The price is still above the moving average. And while gold is pulling back, it's also still on a 6 of 9 sequential. I wouldn't panic out of gold yet. If I was holding gold and my stop loss was not yet hit, where would I set that stop loss? Probably somewhere around 1650, 1640. I would probably wait for a red 1 price flip, and then a red 2 going below a red 1 basically ends any indication of bullish trades. So kind of like this. You see this is a red 1 price flip here, and then you have a red 2 going below a red 1, and the thing just tanks. So I would wait for that. I would wait for a red 1 candle, which would probably come tomorrow, unless this candle starts to drop big time. And then a red 2 below a red 1, basically. If the red 1 doesn't take you out of the trade, the red 2 certainly should. Oil on the weekly. Oil is completely oversold across all metrics. Oil has also made a brand new multi-year low, I'm assuming. I believe that it did. We had a low here of, what was the low? 2605, and this was 27 something. So did we go lower than 2605? We did not. 2734. So we just missed a brand new swing low. This is a weekly reversal candle, but today is only Tuesday. So we will see how this ends. The S&P 500 is having one hell of a rebound. Unless the S&P 500 goes above this green line, this is probably just a dead cat bounce. While I was buying Bitcoin, with the S&P 500 here, I did not buy Bitcoin here because I did not have a reason to buy it. Where is my moving average? Oh, I don't have them on this chart. Let's go to the S&P. This is the daily S&P chart, and you will see at the open in about 3.5 hours, 4.5 hours. And we will open somewhere in the middle of this candle. Unless I see the price of the S&P go back above the 200-day moving average and probably even higher than that, I would need it above 3,000 for sure. This is just a dead cat bounce to me. If I flip this to the Dow Jones, this is Tesla, by the way, which is actually holding up really well. If I go to the Dow Jones, because the Dow Jones was better based on sequential with a 9 right here. Once it loads, once this loads. So if I go to the Dow Jones, this was a good buying opportunity. This, to me, is not a good buying opportunity. Even if it goes to new all-time highs tomorrow, I'll miss it. There'll be other trades. At the moment, while I thought this had a chance to take us all the way back up, or at least a 1 to 4 candle correction, then back down, we are now fully in the countdown phase. So I am expecting this stock market, bear market, to keep going down. Now, just because I'm expecting something doesn't mean that that doesn't mean that it has to happen. It doesn't mean that it has to happen. But for now, I am treating this as a dead cat bounce, and I am trusting the countdown phase of sequential. If I go back to the S&P and I put it on a weekly chart, if you look at my last Twitter, I really thought that the S&P had a chance to fall down to this moving average. And in one day, we came halfway to it. Now, today could be a bounce day, but by end of week, we can still go back and touch it. So for the time being, I am still treating this bounce one second. At the moment, I am treating this, today's move so far in the futures market, as simply a dead cat bounce. And it will remain a dead cat bounce until I see it either breaking or ideally closing above this green line. Anything other than that, to me, is still a dead cat bounce. Now, a dead cat bounce could turn into a bull market. And I will pay attention more to the Dow this time, because if I paid more attention to the Dow the first time, I would have done a better job entering the trade, and I could have made a lot more money on this bounce, on this dead cat bounce, than I actually did. Oh, that's the code that I need to upgrade. Okay, let's go back to your live chat. 1929 all over again. Not even close. Not even close to 1929, guys. Not even close. And I will tell you why. That is a huge misconception. You will not get a 1929 in this market environment. Ten-year bonds. Yeah, I really need to get back to the US and start looking at a mortgage refinance. But I'm in Africa for like 3 more weeks. By the way, I'm going to be going on safaris, so I'll probably be MIA from the internet for like potentially up to as long as a week, because I may not have it. Let me look at the yield here. Oh, wow. Oh, wow. Oh, damn. Oh, that pulled back hard. Whoa. Well, if you have a bond portfolio, you've done well. Jeez. I mean, the chart's still bullish, right? It's a dead cat bounce, and this is a small pullback. Wow. Jeez. Talk about a rate move. Yeah, I'm going to want to refinance. If I can get, let's say, 275 or 250 percent mortgage on a 15-year, that'd be great. So the Dow, 1929 all over again. That is like 99% certain that's not going to happen. And I'll tell you why. I really wish I did this on a chart with a longer history. I may have to redo this chart, but this chart took me, I think, 20 hours of work to put together, and I just can't see myself finding 23 hours of time to redo this chart. So this may not get updated anytime soon or ever. So here's why you are not even close to a 1929 style crash. Because in a 1929 style crash, the stock market rose 450% in less than 10 years. Well, think 500%. Sorry, I take that back. The stock market rose 500%, 490 in 10 years. Do you know what that means for the stock market to rise 500% in 10 years? Let me show you. And I'm cherry picking the low here. The Dow Jones would have had to be, no, it's actually not that far off. But remember, 10 years. It's been 12 years, right? So 10 years. So here you go. Less than 10 years, 9 years. Because we went from about 1921 to 1929. So if we go 2009 to 2018, the Dow Jones would have had to be at $45,000, but it was only at 26. So, and also notice what happened at the very end. It's hard for me to measure this, but basically, let's pick this one here. So 500 upswing, boom, there it is. That's a 500 upswing. So imagine the Dow Jones going up 5x from August 2015 till, yeah, November 2025. That's a 10-year window. This is how much the Dow Jones would have to rise. And in a non-inflationary environment, not a crazy inflationary environment. Hyperinflation can be a part of it. And then and only then is there a potential for a 1929 style crash. Like the market just has not gone up enough. Look at how slow and steady the market's been rising. I mean, granted, there was a fast V-shaped bottom right here off the crash. What people, the gloom and doomers won't tell you, they always talk about the 90% correction, but they don't talk about how the stock market straight up doubled in price for 3 years in a row. Well, maybe not 3 years in a row, but the stock market was rising 50% a year. It was like the shitcoin ICO market. And that's not happening here. Not at all, not even close. In fact, the stock market stayed in the bottom half of this channel between 1931 and 1994, 60 years. The stock market stayed at the bottom of the channel for 60 years. So why can't it stay in the top of the channel for the next 60 years? So this is 1994, and the stock market has a good probability of staying in the top half of this channel, probably into the 2030s, at least 40 years, at least 40 years. So I am not expecting us to go below the middle line of this channel until, you know, for at least another 10 to 12 years, at least another 12 years. So sure, we can fall. The Dow Jones could have a correction. The Dow Jones could have a the Dow Jones could fall this year 40%, but I would still expect the Dow Jones to be in that $75,000 range over the next decade. And we would have to go swing outside this channel. So we would probably have to go, the Dow would probably have to go to at least like, well, it depends on when, right? So if the Dow explodes to the upside in about 8 years and swings to like 95,000 points instead of the 28,000 that it's at right now, or 26, we can then discuss a potential for an 80% correction down to the bottom of the channel. It could probably mean like the collapse of US as a global superpower. But like, don't buy into this 1929 style correction without understanding what happened during the raging 20s. And we haven't exactly been the raging 20s here. And this is why I'm anticipating a robotics revolution. I'm anticipating the self-driving cars and robotics revolution. Maybe 3D printing will finally get its act together as an industry, right? So I'm expecting all of these things to kind of just destroy a shit ton of jobs and send the tech companies that are replacing all those jobs through the roof, potentially causing the stock market to go way high. Also, a bond market collapse could send the stock market to new all-time highs. So there's lots of things, but unless I see a stock market have a year with a 50+% return, and it can't be a year coming off a 50% correction. Like it has to be like an exponential rise in the stock market after a rise in the stock market, like the hyperwave. We need a hyperwave. And we don't. And if we have a hyperwave, it's maybe in phase 3. It's certainly not in phase 4, and not with this current correction. That's for damn sure. All right. I think I have a flight to catch. Let me see. Shit, I gotta go to my flight. I don't even know where I'm going, but I gotta run. Totally lost track of time talking about the Dow. Sorry, guys, not looking at your live chat, and I don't want to miss my flight. So I'm gonna stop the screen share. We're gonna actually go back to the screen share. I'm gonna plug my affiliate codes one more time because that is the only way to make some revenue these days. So please support if you're gonna be using Bitcoin debit cards or TradingView or trading. If you decide to trade, learn to trade before you trade. But if you trade, please use these links. All right, guys, that's it for me, and I will talk to you all on the next one. Bye, guys.